Have you ever looked at a real estate investment and thought that it looked good and then read something that said Accredited Investors Only and thought, what is that? Let me tell you about it. My name is James Furlo, providing strategies and tools to help real estate investors maximize their long-term cash flow while minimizing headaches. Thanks for watching. Okay, to explain what's happening, we need to jump into a time machine before April 2012.
Are you telling me that you built a time machine? Out of a DeLorean?
Before April 2012, there was really only one way to structure a real estate syndication where you didn't have to register your company with the Securities and Exchange Commission, or the SEC. You see, a syndication is where a group of investors pool their money together in order to go buy a larger property. Now, what actually happens is that you're putting your money into a company, and then it's that company that owns the property. It works in just the same way as if you were to buy a public company, except in this case, it's private. You can't do it on the open market. Because going public is expensive, much more than a typical syndication can afford, the government created Rule 506 of Regulation D, which spells out what a company needs to do in order to provide proper disclosure to its investors. This is commonly called a 506B investment in reference to that particular rule. April 2012 comes along with the Jobs Act, and boom, a new rule is created called the 506C. Now, I'm not going to say that this completely changed everything, but it was a big deal in the world of syndications. You see, the 506B didn't allow for any sort of advertising or general solicitation. So a sponsor, someone like me, who's pooling a bunch of investor money together, needed to have a prior relationship with all investors. As you could imagine, it highly limited how many people someone like myself could talk to. So even if I had an awesome 34-unit deal that was going to earn you a 15% return on average, I couldn't tell you about it unless we already had a prior relationship. The Jobs Act wanted to increase investments and innovations to help boost the economy. So it created 506C, which now allowed for advertising and general solicitation for a specific deal. So what that means is that a sponsor like myself could now create a Facebook ad and tell you about a specific investment. No prior relationship is needed. But there's a catch. Since I don't know you, I'm only permitted to allow one type of investor, and it's called an accredited investor. Okay, let's go further back in the time machine.
Roads? Where we're going, we don't need roads.
In 1933, the government wanted to keep novice investors from investing in opportunities that they didn't have the knowledge or experience to properly evaluate. So they created the concept of an accredited investor. That's someone who meets certain standards of wealth and sophistication. Their words, not mine. You have two primary ways in which you can qualify as an accredited investor. The first way is if your net income is over $1 million, excluding your primary residence. The second way is if in the prior 2 years you individually earn $200,000, or with you and your spouse together earn $300,000, and you reasonably expect that you're going to do that again in the current year. So when you see the warning Accredited Investors Only, that's another way of saying that it is a 506C investment. They are only allowing verifiably accredited investors. It's also kind of a subtle way of sponsors saying, we're kind of only looking for people who have already done this before and already know what they're doing and therefore knows what this means. It lets them dive right into the details of the deal without having to do some of the education and nurturing that comes along with people who are new to syndications. And the 506B is definitely still around. In all honesty, that's how the majority of syndications are structured. You just don't hear about them because, well, we're not allowed to tell you about them unless we have a prior relationship. And a 506B is allowed to have up to 35 non-accredited investors. Now, I prefer that because it allows me to invite my family and friends to also invest regardless of their accredited status. On that note, if you're interested in starting a relationship with me so that I can share specific deals with you, please consider subscribing to my Investor Club newsletter. You'll find the link in the description. And if you found this helpful, please like the video. And if you'd like more strategies and tools to maximize your long-term cash flow while minimizing headaches, please subscribe. Thanks for watching.